Hello, and thank you for joining us at XM.com for this Forex Preview video. We'll be having a look at the U.S. data and, of course, the outlook for the dollar. I'm Christina Marujos, and joining me today is Marios Hadjikyriacos, investment analyst. Chairman Powell had his semi-annual testimony before Congress earlier this week, where he reaffirmed that the ocean of liquidity won't be withdrawn anytime soon. Now, investors will turn their attention on the barrage of data out of the U.S. on Friday. Personal income, consumption, and inflation numbers are all expected to have risen in the latest prints. However, an interesting change in dynamics in the bond market is currently affecting the U.S. dollar. Foreign bond yields are rising faster than American ones, raising questions whether the American recovery could also be its downfall. Why is this change in dynamics taking place?
Hello, Christina. That's a very interesting way to put it, that the American recovery might also be its downfall, because I think that's exactly what we're seeing playing out in the bond market right now. So specifically, the US Congress is right now working on a massive relief package, around $2 trillion, and there are expectations for a huge infrastructure package that will follow that one, also in the trillions. So the markets lately have started adopting the view that the benefits from these supermassive spending packages in America could spill over abroad and perhaps allow some of these export-heavy economies, Australia, New Zealand, and Canada, to recover even faster than America will. The other part of this coin is that the dollar has stopped acting exclusively as a safe haven. It has started to realign with US fundamentals, even though this is a relatively slow process. The link with the risk appetite is not going to vanish overnight, but we are seeing the dollar losing some of its negative correlation with stock markets and starting to respond to US economic data again.
So how do you think the dollar is going to perform from here? And can Friday's data offer some support?
Well, here's how I see it. I think that we are staring at a situation where we might have some mixed dollar performance going forward. So specifically, I think that the dollar could underperform the commodity-linked currencies, the Aussie, the Kiwi, the Loonie, but outperform the euro. And the thinking is this: if the FX market goes back to trading economic fundamentals, that's great news for the commodity currencies. We have the vaccines being rolled out, commodity prices are soaring, there's a lot of federal spending in the pipeline, and the domestic economies in Australia and New Zealand are extremely strong as well. So all of this paints a bright outlook for those currencies. Now, on the other hand, we have the Eurozone, where there isn't any impressive stimulus in the pipeline, the economy is very fragile because of the never-ending lockdowns, and Europe has also fallen way behind in vaccinations. So I think that we are going to see the American economy outperforming the European economy, and adding credence to this view is the fact that even though we've seen yields in New Zealand, Australia, and Canada rising faster than American bond yields lately, the opposite has been the case in the Eurozone. So European yields have been rising at a slower pace than US yields, and yet we have seen euro-dollar moving higher as well. So that means that the pair is moving higher even as it is losing support from relative interest rates. And if this pattern continues, I would expect to see a euro-dollar turning back lower again.
Marios, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.